If you have a side hustle, there's a really good chance the IRS knows about it, even if you think you're flying under the radar. Not because there's an IRS agent stalking your Venmo feed like it's a Netflix series, but because the IRS gets income data from payment apps, gig platforms, marketplaces, and brokers, and then uses automated matching to compare what they received versus what you reported. And when those numbers don't line up, that's when people get letters, surprise notices, and surprise tax bills. So in this video, we're going to cover exactly what people mean when they say the IRS is cracking down on side hustle income, and the biggest mistakes to avoid so you can stay compliant without overpaying.
All right, let's get into it.
First, when people hear IRS crackdown, they picture a full-blown audit. That's not what most side hustlers experience. The modern crackdown is usually a computer doing a math check. You file your tax return, the IRS computer compares it against the forms it received from third parties, things like W-2s and 1099s. If the IRS has a form showing income that you didn't include, you may get a notice saying, essentially, "Hey, our records show you made more than you reported. Here's what we think you owe." And this is why "I didn't get a form, so I don't have to report it" is one of the most expensive myths on the internet. Because the truth is, a form is just a receipt. It's not the rule. Income can be taxable whether or not you got a 1,099. And now the IRS has more data sources than ever, plus better systems to connect the dots. So let's talk about the three big pipes the IRS uses to see side hustle income. Pipe number one is information reporting. 1,099 forms. The big ones are 1,099 NEC for contract to pay from businesses, 1,099K for payments through apps and marketplaces, and for many people starting now, 1,099 DA for certain digital asset transactions. Pipe number two is automated matching. That's the big shift. The IRS doesn't need a human to discover a problem. If a form exists in their system, and it doesn't show up on your return the way they expect, it can kick out a notice. Pipe number three is improved return selection and analytics. You don't need to believe in some sci-fi IRS supercomputer to get the point. The agency has been modernizing for years, and mismatches are easier to spot than ever. Okay, now let's get into the actual mistakes. Because most people don't get in trouble for having a side hustle. They get in trouble for sloppy reporting, sloppy record keeping, and bad assumptions. Here are the mistakes to avoid. Mistake number one. Thinking no 1,099 means no taxes. This one is brutal. Whether you get a form or not, if you got paid for goods, services, or gig work, that income is generally reportable. And here's a key threshold people miss. If you have net earnings of $400 or more from self-employment, you're generally in self-employment tax territory, Social Security and Medicare, on top of income tax. So if you're thinking, it's only a few $100, it doesn't matter, it can still matter. Also, real talk, not getting a form doesn't mean the IRS can't see the money. You might have a platform payout, a bank deposit trail, or state-level reporting. Or you might get a form next year when thresholds change. So the right mindset is, the form is not the trigger. The income is the trigger. Mistake number two. Treating a 1,099K like it's your profit. If you sell on platforms like Etsy or eBay, or you get paid through certain payment apps, you may receive a 1,099K. Here's the problem. A 1,099K usually shows gross payments. That is not profit. Gross means before platform fees, before refunds, before shipping you paid, before discounts, and for product sellers, before your cost of goods. Let me make it real. Let's say you get a $1,099K for $24,000. But inside that $24,000 you had $2,000 in platform fees, $3,500 in shipping you paid, $12,000 in inventory or cost of goods sold, and $1,000 in refunds. If you report $24,000 as income and forget the rest, you're volunteering to overpay. The right way is to use the $1,099K as a starting point and then reconcile it with your records so you report your actual income and claim your legitimate expenses. Mistake number 3. Misunderstanding the $1,099K threshold changes. This is where people get confused, and honestly, I get why. Because the rules and headlines have been all over the place. Here's the key point for this filing season. For many platforms, the federal $1,099K reporting requirement is back to the older rule. Generally, over $20,000 and over 200 transactions. But listen carefully. That threshold affects whether you get a form. It does not decide whether your income is taxable. Income doesn't become tax-free because you didn't hit a threshold. And here's another trap. States can have different thresholds. Some states have lower reporting limits, and platforms may still send forms for state purposes even when the federal threshold isn't met. So, if you're in a state with a lower threshold, don't get blindsided by a form you weren't expecting. And even if you don't get a form at all, you still need to report taxable income. Mistake number 4. Not handling personal payments and personal item sales correctly. This one hits people who aren't even side hustling. Maybe you sold your old phone, cleaned out your closet, or sold a couch. Sometimes people get a $1,099K for that. And that can feel unfair because you're thinking, I didn't run a business. I sold my old stuff. Here's the important distinction. If you sold a personal item at a loss, you generally don't owe tax on that sale. If you sold a personal item at a gain, the gain can be taxable. So the mistake is either ignoring the form completely or reporting the entire gross amount as taxable income when it's not. Also, if you get a form that's wrong, like it includes reimbursements, gifts, or payments that aren't actually income, don't just shrug and hope it disappears. Contact the issuer and ask for a correction. If you can't get it corrected in time, you still want your tax return to make sense in case the IRS computer matches that form and expects to see it addressed. The goal is no surprises, no mismatches. Mistake number 5. Mixing personal and business money. This sounds basic, but it's one of the biggest reasons people get into trouble. When everything runs through one personal checking account, here's what happens. You can't tell what's income versus reimbursements. You can't tell what's business expenses versus personal spending. You forget deductions. You can't back things up if you need to. If your side hustle is real, even if it's small, separate it. At minimum, have a separate bank account. Even better, separate bank account and a separate card. Your future self will thank you. Mistake number 6. TikTok write-offs without documentation. Let's talk deductions. Side hustles are awesome because you can deduct legitimate business expenses. But the internet has turned deductions into a fantasy game where people think everything is a write-off. Here's the reality. If you can't explain the expense and support it with records, it's not a write-off, it's a gamble. And the 3 biggest deduction zones people mess up are: first, car and mileage. If you drive for deliveries, rideshare, client meetings, mileage can be huge. But you need a real log. Not, I drove a lot. Not, I'm pretty sure it was about 10,000 miles. A consistent mileage log, preferably tracked as you go, is the difference between a legitimate deduction and a headache. Second, home office. Home office is real, but the rules are strict. It generally needs to be used regularly and exclusively for business. So if your home office is also the guest room or the dining room table, you need to be careful. There is a simplified method that can make things easier, but don't force a home office deduction that doesn't qualify. Third, meals, travel, and lifestyle-looking expenses. If note-taking is part of your work, sure, maybe you buy notebooks. If you create content, maybe you buy equipment. But the moment your business expenses look like your normal lifestyle, vacations, eating out, shopping sprees, those are the categories that get people into trouble. Mistake number 7, ignoring estimated taxes. This is the one that causes the biggest April surprise. When you have a W-2 job, taxes are withheld automatically. With side hustle income, nobody is withholding by default, which means you can have a profitable year and still get wrecked at tax time because you didn't set anything aside. Here's a simple system that works for most people. Every time you get paid, move 25% to 35% into a separate tax bucket account. If your income is lower, maybe it's closer to the low end. If your income is higher, you may need more. But the point is, make it automatic. Then you've got 2 main options. Option 1. Make quarterly estimated tax payments. Option 2. If you have a W-2 job, increase your withholding there to cover your side hustle. Either way, don't wait until the filing deadline to find out you owe thousands. Mistake number 8. Reporting losses year after year like it's a strategy. If you file a side hustle on Schedule C and you show a loss year after year, especially if it conveniently reduces the tax from your W-2 job, that's a classic red flag. The IRS draws a line between a business and a hobby. And if the IRS decides your activity is a hobby, it can change how expenses are treated. So don't run your side hustle like a tax loss machine. If it's a business, run it like a business. Keep records, market it, adjust strategy, show a real profit motive, and work toward profitability. Also, one quick practical tip. If you're estimating expenses, avoid making everything a perfect round number. Real bookkeeping looks messy. It has odd amounts. It looks like real receipts and real software. A return that's packed with clean, rounded estimates can invite questions. Mistake number 9. W-9 mistakes and tax ID mismatches. If you freelance, you've probably filled out a W-9. If the name and taxpayer ID you give don't match what the IRS expects, that can lead to problems, like delayed payments or backup withholding. So if you formed an LLC, changed business names, switched from SSN to EIN, or updated your legal name, make sure your platform profiles and your W-9 info are updated. This is boring admin work, but it prevents a ton of pain. Mistake number 10, crypto reporting mistakes, especially cost basis. If you touched crypto or other digital assets, this is a big one. The reporting world is changing fast, and more people are going to receive forms tied to digital asset activity. One of the biggest traps here is the gross proceeds issue. Some forms report what you sold for, but they may not fully capture what you paid, especially if you moved assets between wallets or exchanges. If you don't report your cost basis properly, it can look like you had a much bigger taxable gain than you actually did. So if you did any crypto activity, keep your transaction history, reconcile your transfers, and don't assume the exchange dashboard tells the full story. If you're active, using crypto tax software is often the difference between a clean return and a nightmare notice. Mistake number 11, ignoring IRS letters and deadlines. If you get an IRS letter, don't do the "I'll deal with it later" thing. A lot of IRS notices have response deadlines, and many issues are fixable if you respond with documentation or a correction. Ignoring it is how small problems become expensive problems. Also, quick note, the IRS has been pushing modernization of payments and account tools. So it's more important than ever to have an IRS online account access set up and to keep your direct deposit info current. Because if your refund can't be deposited successfully, it can cause delays. Okay, now that we've covered the mistakes, let's talk about the simple system to stay out of trouble. This is the weekly compounding side hustle tax system. Step 1. Separate finances. Even if you do nothing else, do this. Separate account, separate card, or both. Step 2. Track income weekly. Not once a year, weekly. A simple spreadsheet is fine. Accounting software is great, but you need a consistent habit. Step 3. Track mileage and receipts in real time. The easiest way to lose deductions is trying to reconstruct everything months later. Take the photo, save the receipt, log the mileage as you go. Step 4. Set up a tax bucket. Automatically move that 25% to 35% to a separate place so you don't accidentally spend it. Step 5. Reconcile your forms in January. When you receive your 1099s, don't just shove them in a folder. Compare them to your own records. If something looks wrong, address it early. The whole goal is simple. Your return should match reality. Reality should match your records. And your records should reconcile to the forms the IRS receives. If you do that, the IRS crackdown becomes background noise. Because there's nothing for the computer to flag. Now let me add 2 quick watch this items for this filing season, because a lot of side hustlers are going to get tripped up here. First, don't confuse reporting thresholds with taxability. Just because a platform didn't send a form doesn't mean the income is tax-free. Second, be careful with new deductions and headlines. If you're seeing viral posts about no tax on tips or no tax on overtime, understand that these benefits are often tied to very specific definitions and documentation. If you're a 1,099 gig worker, don't assume you qualify for something designed for W-2 overtime. Always double-check what actually applies to your tax situation. Alright, let's bring this home. The IRS isn't hunting side hustlers for fun. But the systems are better, the forms are expanding in certain areas, and automated matching is real. So if you want to protect yourself, here's the mindset shift. Stop thinking in terms of, will I get caught? Start thinking in terms of, will my paperwork match the paperwork they already have? Because that is the game now. If you want a follow-up video, I can walk through a simple, real-world example. How to report a side hustle from start to finish. Income, expenses, mileage, estimated taxes, and what to do when a 1,099 looks wrong. Comment the words side hustle taxes if you want that next. If this video helped, hit like, subscribe, and I'll see you next week, right here on Weekly Compounding.